Good evening, Wizards, and welcome to episode 16 of Wizard Wednesdays. Now, do not fear, I have not gone anywhere, nothing has happened to me, I'm still here in the same place. I've just been a little busy, a little drained, and a little bit set back from working on the Wizard platform. So, I actually want to kickstart this specific episode going over what I've actually been doing over the past few days, why I've taken a break, how I've taken a break, and how I'm actually managing to even take a break from trading. How am I doing this? Is it possible? How do people even manage to get away from the charts? And the truth is, the reason I've even taken a break in the first place is because I am very drained just from working on the Wizard platform, working on the charts 24/7. I actually haven't taken a holiday or a day off or a trip away, or haven't ever really left my house this year, to be honest with you. And we're now moving into around 7 months deep into the year without a single break. It can get very draining. And what's funny is, even though it's not physically draining or labor equivalent working on charts, it's incredibly mentally draining. And it's so important to actually take a rest from time and time to kind of get yourself back on track, get back to your mental refreshed mind state, and look at the charts in a much more clearer perspective. What you'll quickly realize over time is that the more you spend on the charts every single day consistently, you begin to wear yourself out mentally. Now, the biggest problem here is you begin to view the charts in a potential different light. You may view the charts a bit differently to normal, or just overall your mindset is not the same because you're just a little bit tired and you haven't gone in with a fresh perspective. And what's funny is the market, just like the likes of Forex or stocks, is consistently changing. It's always moving. It's a very dynamic market. Now, crypto is 100 times that. So that means even if you are moving in synchronization with the market and even watching it every single breathing second of your living day, there are times where you do not realize you've become so fixated on the candlesticks, you haven't realized the overall market has adjusted and moved or changed bias. Now, I'm not saying that's the case for me in this particular instance. I was just very drained. And again, with so many of the calls coming through and a lot of money being made, it was worth taking a little rester to get back on track, clear my mindset, and come back in even harder. So, although there hasn't been much going on in the chart side, 2 days, guys, I'm not even looking at the charts, and it's very important from time to time you also do this yourselves. I didn't even monitor, I didn't even check, I did not care, I just left it, let price do its thing. I've now come back, I've left the BTC levels all here the same, I've stripped clean the XRP chart so we can work on that again and have a little oversight into what's going on further. So the first thing that happened, although I'll fully put my hands up, the trade was closing a stop loss, as I saw when I came back to my charts literally earlier. It was closed out as we saw that little push lower that I wasn't expecting. Although I cannot take the glory or any kind of credit for that particular movement, it did finally hit the $10,000 region as projected and spiked all the way back up. If you notice on a daily perspective here, around $10,800 to $10,670, the region where I was calling the pullbacks for potential long opportunities did actually sustain and hold up precisely well. The daily candle closures 2 days in a row and even 3 days technically over there did cause a perfect hold of support at this precise region, but we did see a lot of wick fishing much lower than expected, and $10,000 did come through a bit sooner than expected. So hopefully, even though I've been telling you guys this will be coming through since when we were up there, it shouldn't have come as too much of a shock that it actually came through. Same goes for XRP. Over here, we actually touched the 38 cents region. We fell into that barrier and pinged back to the upside as well. So definitely need some fresh perspectives on XRP as well. But overall, the fact of the matter is both of the regions that were projected to come through in the event of a pullback did actually come through, and they held up pretty phenomenally well. So here we are back in the game, and again, just going over this once again, guys, I highly recommend you do this from time to time. Take a little break, go and do something else. Do not continuously stare at the charts because it will just burn you out. So now that we're back and fresh with a good perspective, let's have a little look at the dominance as well. We're looking at 62.3%. The BTC dominance has been rising pretty well over the past few days. Again, as we covered in the prior analysis video as well, we were looking at around 56 to 52% for the majority of June and May in particular. Let's go over to May as well. We were looking at around 55 pushing a little bit higher, 56, so just fluctuating in the 50s. It was only the past few weeks we've really started breaking through, and even the past week in particular, we started hitting that 63% region, 64% region, but more importantly, we are mostly lingering in the 62% region. So the BTC dominance has been rising phenomenally well, and as you can see again, up another 10.63% on the day currently counting. So I actually cannot believe after going MIA for 2 days, I've come back to an $11,400 BTC, considering it was down there. It's amazing what this market can do in a matter of days. So looking at this now, it is actually now following the original bias. Take away the huge wick fishing that occurred here, we are actually still on track and moving towards our original projected target. So again, this is the purpose of why I cover stop losses and profit. The initial trade that blew through the roof, plenty of profit was made on that move anyway, so it even counteracted my loss on that stop loss there. I didn't actually lose a penny in the end because I secured the profit off the initial move. If you remember, catching a move of $400-$500 was more than enough to justify a loss of $400-$500. So again, a break-even start to the week, which isn't too bad considering stop loss was hit. Not too fussed about that whatsoever. More than happy to see how this is playing now. So as we start going over to BTC, let's just look at the alts again. Again, the focus and priority is always going to be XRP and Bitcoin for the time being. I've just found that not only are you guys easily able to transfer this and transition over to any other altcoin of your choice, it allows a more focused perspective on the two coins that are my personal favorites. So I found that the more I focus on Bitcoin and XRP, the more effective my analysis has been, and hopefully the Telegram has proved, did I just say poo? The Telegram has proved that in a much more efficient manner now. So you can use this on any of your altcoins as well, and it will transition very smoothly over. So many people are asking what's going on with BTC. Is it going to dump? Is it going to pump? Well, let's go over to the weekly first of all and look at that horrific weekly candle. Perfect rejection of the highlighted region we had from the prior Wizard Wednesdays and the analysis video showing you the BitMEX account as well. So if you're having a look at that right now, huge wick rejection there. We are now slowly breaking through this level here. There's this 4-hour level, as you can see, of around $11,500, also going up to around 11.6, which I should be extending a little bit higher to 11.6, because this was a crucial region and one of the first regions of pullback we actually identified upon the market reversing from the likes of $14,000. So using this region and taking that into consideration, once we break above this level, the original targets and biases will be very easily achieved, around $12,500 up to $13,000. So on a weekly perspective, looking like we're going to break that region anytime soon. Any form of pullbacks and rejections, we can be looking yet again at around $10,800 to $10,650. Just a quick rejection and a blow through the roof. As you can see, the reason I'm actually anticipating a fairly solid end of week closure, again, looking at how prior weeks and wicks like this have closed, I've told you before, when you start seeing large wicks like this, as we've seen many times over, more likely than not the candle is going to, the next candle the following week after such a huge movement like this, is going to attempt to at least breach and tackle that same region that caused such a drastic pullback. We're looking at the likes of $14,000 being dragged all the way down to close back at around $10,000 to $11,000. So looking at a $4,000 pullback is pretty substantial in a single given week. Looking at the daily period on that as well, that took 1, 2, 3, 4, 5, 6, 7. It's around 6 days overall, so just under a week to achieve that level. And what I'm seeing right now is a pullback, a rejection of this level. Bearing in mind, look at this, $10,000 pretty much. We did not really retest this level upon a breakout, and that's why I was very curious on this level being met. So if we go over here for a second, you'll see one of the last real main messages I posted was saying that $13,000 to $13,200 is a really big region of interest for me. Almost completely convinced the move we're hoping to catch up to this range is the final push to test the validity of this level and trigger the turning point we've been expected. The sudden and sharp pullback of 14,000 kick-started the first half of the turning point projections perfectly and showed that level is not something to be messed with yet. Now, again, as it says here, to make a 6-month rally come to a halt and consolidate like that in a single blow upon being met shows us it could be a real fight to breach. Now, considering it not the balls out of action within 2 to 3 days, it may be their time. that is coming up. So with this retest of the 13,000 mark being the pullback necessary for the bulls who got wrecked to reposition themselves within the market at least somewhere around the highs, knowing that a full-blown attempt to $14,000, apologies for the sirens, again may trigger the bears stronger than before and cause a loss of opportunity instead of flowing with the natural market cycle of a potential 13,000 correction. So again, looking at all this, we'll get into this in a second anyway. All I know is, as mentioned above, the likes of $10,000, I had to search it up here, and $8,400 have not been met yet, and that keeps me on red alerts. The fact we've tapped that level has knocked one hurdle out the way, but we still have $8,400 completely untouched, which I believe will be met at some point. I think the fact that we've blown through the roof, we've actually fulfilled $10,000 again, it's gone to prove now that all of these levels I point out are very, very valid. So another key point as well, $8,400. The longer it takes a target to be met, the further it extends. So let's just say you had an upside target here of $13,560. The longer it takes, the longer and higher the target goes. The same goes for the downside as well. The longer it takes to achieve that level, the lower it ends up going. So huge focus on the $8,000 region for me in particular. 8.4 is the key level, but $8,400 is a huge level of concern for me. So looking at this weekly perspective, I do believe we are going to be tackling that $13,000 zone, pushing up to this region here again. Even if we breach by an extra $500, as I said here, even possibility to wick fish a little bit higher, very possible. And looking at this now, there's only one key thing that's really caught my attention. So looking to engulf this candle and monitor. If we start breaching this wick, then that's when we can expect the likes of 16,365, where the Fibonacci is, up to around 17,000 to be met. So I won't be drawing a region there. Instead, I will just drag this over, as I'm not too concerned about all-time highs yet. As many of you know, it's not really a region of concern for me anytime soon. I do not see all-time highs actually being breached this year yet. So I'm still pretty convinced we are going to see a very sharp pullback and gear us up. As you know, the same level applies here. So these are the same Fibonacci's from the prior video. As you can see up here, the upside target, that 61.8 rejection was pretty beautiful, if I say so myself. So looking at that now, wick fishing up to here, nice intraday opportunities up here to catch the original long we were trying to catch. And if you look on a daily perspective, here's the only thing that's a bit of a sticky situation. If I drag this from there to there, you can see the 61.8 was met very nicely, $9,900, met it, rejected. So it could be one of those moves which does breach into that zone I just covered up here, potentially tapping into these regions and even tapping up to that zone there, but falling just short within this overall range. So if we are going to see a drive up, it is going to be one of the final drives within this zone. Again, using this level here, not too much concern just yet. But overall, I want to really see how that weekly candle ends up reacting and closing. So if you start seeing weekly candle rejections below this wick not really exceeding or breaching, that's the candle closures, we are going to see an even larger fall and continuation to the downside. This is simply showing us again that the market is very possible of throwing in very nasty surprises to trick us and show us what it can be capable of. So do not be surprised moving into the week ahead if you do start seeing the likes of $8,000 and even dropping much further by the end of the year to 6,000. As I said, it's all still very relevant and all still within reason. So that's why I have not said at any point in time this is no longer a possibility, because I'm still fixated on 8,400 around this region here. Very precise level. I'll actually 8.4 to 8.5, let's just leave that marked up there for the time being. Realistically, 9,000 is pretty crucial too, but that rejection there, alongside the cruciality of $8,400, still very big and very high on my radar. So week ahead, looking at the intraday opportunities, let's just say this current region here, using the Fibonacci guidances, they do not align very well with any real crucial level, very random, 15,500 and 17,700. Going back over 15,500, yeah, we saw some rejections, some nice crucialities up there, but nothing too significant as the likes of these zones here, which cause the true reversals. This is more intraday candle activity in between the overall movement. So going over to the 4 hour, having a look at this right now. Dragging this over to there, you can see we've had a nice movement over here. The trend line has now been broken, so you can and should be cautious of any potential pullbacks to reject this region now that it has been broken. So for example, here we are rejecting around $11,600 once again. This could very easily for me provide a pullback to the likes of $10,600, and what just happened there, $40 or so, give or take, around this region before gearing up to extend towards these targets. And again, if I was to just flip open the Fibonacci tool on that as well, you're looking at maybe an extension down to here around 10,400 in the event of a pullback, because again, even though it looks like a nice little region to potentially buy, I do not like to buy at the highs anywhere near these regions. So whether it's a low or high, you do not do the inverse. So if you're at the absolute high of resistance, it's not very wise to buy. And of course, if you're on the downside of support, it's not really wise to short the support. So try to avoid those at all means necessary. And again, as I was stating on Twitter as well, when it comes to taking a break from the market, one of the main things I do is do not trade for 1 to 2 days. I actually analyze the market first. I either completely strip my charts clean, as you will be seeing here shortly, and we're going through this analysis together, so we're on the same wavelength. And then on top of that, I like to give it 2 days or so, even 3 to 4 sometimes, to let the market start unfolding in my favor and then regain that synchronization with the market before I begin executing trades. So everyone's just saying, where have you gone? How can you go? You've left us. And that's the point. The point of these videos, the point of all this free education I do, is so you guys do not need to, fully rely on me when I'm actually gone, because there will be times when I'm busy, could be personal life, I could just be extremely exhausted. I have some huge tasks going on over here, and the Wizard platform, I mean, at the end of the day, it is due to launch soon, and I know I've been saying that for a long time, but I promised you guys, and I made a pact from the very beginning to not overpromise and underdeliver. Quite the opposite. So hopefully by the teasers I've shown you now, you can see there are some very phenomenal things going on behind the scenes, and that has taken up a lot of time. So that's why I've been really just throwing all my cards out on the table in the Telegram for free, to just let you guys know you can do this on your own as well. And I'm here to help you every step of the way in the event I do go MIA for a few days here and there. So first 2 days off for 2019, I'm not too concerned for the time being. So moving into synchronization with the market, that's the most important factor as well. Use this as a nice little consideration of a pullback and a potential rocket ship up towards our next upside target. So the reason I'm looking at these targets in particular, now again, we've got the downside fibs, I'll leave them open for now. Looking at this rejection here, we also have this zone to take into consideration as a nice region price could drive itself up to before potentially pulling back and gearing up higher. If price starts breaking this level, again, do not FOMO in upon a breakout, because it will go straight to your target. If you've rebought and you've used the analysis provided, then no doubt you're probably already riding a nice long anyway. Take into consideration, every time we enter a trade, stop loss goes into profit or break even, you never lose. You literally can rarely ever lose, and you'll never really blow your account unless you have a horrific losing streak, which I will avoid at all means necessary. So looking at a breakout of this zone as well could potentially drive us straight towards around $12,400, $500. Pull back, build up some more energy and stamina and blow through the roof and start rejecting the likes of 13,200 and even testing these all-time highs. So that is the biggest focus for the time being, focusing on these two regions here. So taking that into consideration, I think these levels are also the Fibonacci's as well. Well, they were initially before we saw this original move. So with this current pullback, look in there, we are looking at the 78.6 around $13,000, and just below we have that region there as well of 12,250, lining up very nicely with prior levels of support and resistance. What we're looking at here upon a breakout is that zone as well. So taking this all into consideration for the end of the year, the analysis and goals and the vision has not changed. I'm still waiting to see, with such a huge wick now, it's left a lot of room open from the likes of $11,400 all the way up to $14,000 again, pretty much, for price to incline, reject the region, test it out for another week or so, and again, if it breaks through, look at rejections of 13,600 to 14,000, and let's ride that wave all the way up to $16,500 to $17,000, and then start catching those shorts yet again. But for the time being, looking at what we're seeing right now in the market, beautiful rejections, very crucial of this region as well. Look at this. Something to really take into consideration here is the level here, this wick. Let's get rid of that. Look at this level here. Drag that down up to the wick around here. Wick lines up nicely with that as well. So rejection, broke through closures, rejection, spike through, rejection, now tapping that region. So for all we know, if this does fail to break over the next week or two, the rollover will begin much earlier than expected. And if I was to draw that probably wouldn't work too well, but yeah, doesn't line up too well, doesn't really make too much sense. I won't really focus on that for now, but it could be a non-Fibonacci setup. Not everything actually works in favor of the Fibonacci setup. So in the event we are going to start seeing a pullback of BTC, there is that question that arises: will the altcoins end up having their altcoin rally? It's happened every other time, so no doubt you will begin to see some coins explode through the roof as well. But inevitably, I think this will all be really short-lived until 2020, where we're going to start gearing up for that magnificent move we are all expecting. So again, we need to really take this into consideration. If you are profit taking, if you are holding some positions, it is always wise to just take a little bit off the table. We're very, very high. We've seen around 400% since the start of the year. You have to be grateful for these movements in the market. So again, taking this all into consideration, looking at this level here, once we start seeing potential hold-ups of this level, a nice strong wall of resistance, we can start identifying the next legs down of $8,400, $8,000, and of course the ever so dreaded $6,000, all still a possibility, all still realistic, and this huge pullback should now have shown you we could be gearing up for that very soon as well. So again, bearish closure, huge wick over there, very scary sign, but again, it's not really wise. I'm not really going in for any shorts yet at this region, although this resistance level of $11,600 is crucial. I'm not really willing to short, knowing that, let's just use the normal theoretical explanation of a short position. I mean, even if you was to write it down to $6,000, it's not too good of a risk reward. I do not really want a 2,560 pip stop loss in order to make 5,565 pips. Not really worth it for me personally. I'm not really willing to have a stop loss or a position size that small. It just doesn't work in my favor. Whereas we start tapping this region here and you start seeing, let's just say the extra $500 I mentioned, even up to there, I'll just leave it up there. I'm not really too fussed, leave it there. Looking at around 1,500 pips in anticipation of a potential 6,900 pips. That's much more in line with my usual risk to reward. In very rare circumstances do I go for much less risk rewards on those setups. So that would be it for me, but for the time being, looking at this here, looking on those entries, again, it looks like it could just blow through the roof, to be fair. So just be cautious of that. It would be wise to be aware of a pullback, but looking at how this has reacted and how this is reacting here. So here's what would aid the pullback first of all, if it was to occur. Perfect reversals on this region, rejections galore, tapping, looking at that over there. Let's just leave that open whilst I draw this level yet again. Again, it's quite nice to just come back with this fresh perspective. As you can see, the 78.6 and stuff is holding, so any form of pullback here could correlate very precisely to this exact region you're seeing as well, just around here, and then inevitably blowing us through the roof. So if I was to double fib this bad boy up, we could have a little look here. As you can see, you could be looking at some confluences around that level as well. A, B, C, double array extensions there as well, and bang, we start progressing higher. So take that into mind and factor that in. Overall, everything's moving in favor of our analysis, and I just wanted to provide an extra bias and a bit more of a fresh perspective on that as well. So going over to XRP, the first thing we must always draw is the most recent wick to wick. You could consider this if you really want, but I mean, it's a bit messy and it does work to some extent. If you do it from even there to there, that can count if you want. And if you want to extend this out further, if it starts dropping lower, then by all means do that. But for now, more than acceptable to use this rough trendline sketch. So the first thing that's really paying attention to me right now, let's get these levels plotted first of all. Let's get those nice green zones ready. The key region of 30 cents. Always need that level marked by any means necessary. That's a very big region for me. Extensions down to around 25 cents. Again, nothing to worry about just yet. Let's focus on the most recent price action and the most current and existing levels of price. So drawing that level there, nice and solid. And we are also looking at two levels up there as well. Very precise regions to really take into factor. So we're looking at around 45 cents. I will now duplicate that just a little bit higher, up to 50 cents as well. So what we're looking at here, as you can see from a weekly perspective, is we are still inclining lower. Overall, from the grand scheme of things, we're making lower highs, as you can see, lower, lower, lower. So there would need to be, I believe, an actual explosion higher to at least accommodate for some form of BTC movement. I still believe, again, how BTC's broken all-time highs, or yearly highs at least, we should be seeing something similar with the altcoins very soon as well. Very cautious of the likes of 35 cents down to this trend line here, but I do believe If you look at this from the wick down to this present region, 60 cents was a big region of caution for me after 57, so 57, 60 cents, even pushing up to the likes of 68 cents. It's very possible. And although I do not really believe we're going to be seeing the likes of 15 cents, if we begin to see that BTC pull back down to the 6,000s, you can start to expect a break of 30 cents, which I do believe is still very high on my radar. The likes of 24 cents and even dipping down to around 25 cents over here, still a huge possibility in the not long run, but necessarily in a matter of months after we've fulfilled a fairly large movement. So putting all of this aside here and looking at how this is holding up, I do believe this is gearing up for something relatively large. The market has been very restrained, XRP in particular, hugely suppressed on a intraday level, a daily level, a weekly level. Even when this huge news is coming out, MoneyGram, for example, more escrow has been released, being bought up, partnerships happening everywhere, more use cases for XRapid, and it's still not working too effectively in the price's favor, which just tells me there is a lot of suppression going on. So let's just go to the daily, brush this up ever so slightly. Again, guys, a key thing to take into consideration here is, although you may like to put it where the most congestion, almost messed that one up, if you actually just extend these out to the very wicks, you will see the price action does occur, especially on XRP, very precisely to the extensions. Instead of putting it there, then having to enter prematurely and have a wide stop loss, leave it here. Even if you miss opportunities, you're catching much more efficient, much more precise and less risky moves by really extending those regions out. You're saving yourself so much hassle. Just wait for these regions to be met. For example, it pulled up a bit higher, but wait for these regions to be met and look at the precision versus entering here where more congestion occurs and you're just riding out horrific waves in the market. Good example, bang, bang, entered, bang, reversals. You can use it for support and resistance as well. So touched it, fell down, bouncing between key ranges. It's happening on a small level and it's happening on a much larger level up here as well. So imagine extending these out, price taps this level, bang. If you want to extend this out even further to there, you can as well, because realistically it's more precise touching there, but there is a bit more activity here and it's a bit more easier on the eye. This comes with a bit more training doing all of this stuff over here. So putting that into consideration, around 46 cents, what are we looking at right now? We should be seeing a nice pullback on XRP for the time being, looking at where it currently is. Nice pullback to around 46 cents, pushing up to around the fib over there. Although I do believe for now around 46.2 is an ideal region. And again, it could gear up for that 35 cents drop. So if we're using that into consideration, it could then gear up for the huge explosion. I do think inevitably we are going to start building up towards 60 cents and 70 cents. So we do need to prepare for such a build up. As you know, after breaching this level, I was anticipating for 57 cents, still very well on my radar up to that Fibonacci level as well. So using that wick over there as a little indicator, let's use that. We'll leave it that color. Again, keeping this nice little green theme going as well, matches the purple and green candlesticks. As you can see, daily perspective as a daily region as well. Let's just mark up some key daily levels to bounce from. So all I'll do is leave that for the time being. Let's get rid of that, keep it nice and clean. Let's also get rid of this. No, we'll get rid of, yeah, we'll leave that for now. That can stay this level here just to mark up a nice intraday level where price is bouncing back and forth in between. You've got that level there and you've got the downside region here as well. So there's a lot more activity going on with XRP, which does make predictability a little bit easier to anticipate. So what you're looking at is a trend line here, very perfectly that's been met. However, it almost looks too good to be true and a little too perfect. So I would just be cautious of this particular reason here where there's a lot of liquidity occurring. Price could be slamming down at some point to around 37 cents in a surprise move, which would inevitably wipe out many people looking for that third trend line bounce. From there, I believe that would then cause the initial rocket ship back up to 46 cents or so, and then gear up for a potential pull down. However, the pullback may not even come through, and it could just blow straight through from there. So there's a bit of a different scenario going with XRP right now. The dynamics are a little different, but on a weekly focused perspective, you can see we're gearing up here. I wouldn't be surprised to see that rejection even down to 39 to 36 or so. And then from there, we will start gearing up for that next explosive movement. So ignore the fib for now, actually, and let's just focus more on the upside movement. Because if you focus on the upside, body, there we go, makes more sense. So A, B, perfection, because there's double closure over there. Ignore the messy wick. You could even do this if you really want to, but that would make more sense, even up to there. That makes pretty good sense as well, very perfect. 50 cents, around 450, what is that? 54, sorry, went brain dead there, haven't had enough Red Bull today. And again, we're looking at around 38.5 cents here as well. So give or take, however you want to play this out, the fibs line up, they make perfect sense. 50 cents and 53 cents over there as well, with extensions up to there. Overall, I think these targets could align with a nice little push up to here as well. So do be prepared for a potential XRP explosion coming very soon. Price action, despite the manipulative regions around here pushing down to 37, I think we are gearing up for a potential move higher. So looking at how BTC could be pushing further up to these regions, it's either going to go two ways. It's going to play out exactly in sync with BTC, and the final push for BTC either up to all-time highs, yearly high, sorry, or these regions around here where the fibs are, will align with that final push on XRP up to 46 cents and pushing up to 50 or so, or we either see BTC start dumping from around these regions here, and then the profit shifting goes over to XRP, which inevitably begins aiding the altcoin pump. But theoretically, right now they are still all moving up in synchronization with BTC, and because the dominance is so high, it's clearly taking the lead. So do not have your eyes set too much on an altcoin rally, because for the time being, we are seeing BTC go on a crazy run without the altcoin. So unless we can see a bit of a detachment and a bit of a BTC dominance drop, as of now, over the early few weeks of July, is a crucial region which I believe could be the catalyst for the altcoin rally. But until we see that Bitcoin dominance, guys, do not put too much focus on it. Just know I do feel a very big move with XRP coming. Even if it is a quick, short-lived move like this, I believe it would aid the rally higher and then inevitably pull us lower before blowing through the roof in 2020. So again, huge wick like this is a good example. This happened in a single week where we went from 28 cents up to 80 cents in a single week. Yet we closed back below 60 and reversed lower. So looking at how the price congestion is building up over here, we began breaking higher. This was originally resistance, now support. It is inclining us higher. So I do believe we are looking at around 60 cents very, very soon. So the time could not come any sooner. Let's hope this comes through. And more importantly, I hope you've enjoyed this week's Wizard Wednesdays.